As with GL accounts and vendor accounts, customer accounts also consist of two areas. General data. A customer account is defined for all company codes at the client level. General data, such as the customer's address, is stored here. General data applies for all company codes that do business with the customer. Company code segments. Postings cannot be made to the customer account for a company code until company code specific settings have been created. The company code segment contains information that pertains to just one company code, such as agreed terms of payment. This figure shows the company code view of the customer master record.
In the same way as for general ledger accounts and vendor accounts, customer accounts are stored in various account groups so that they can be organized and managed more easily. The accounts in an account group usually have similar characteristics. For example, you could have one account group for domestic customers, customers abroad, affiliated customers, one-time customers. Account groups have a number range assigned to them. Number ranges are of two types. Internal. Do not enter a customer number when creating the customer. Instead, the system assigns you a customer number from the number range assigned to the account group when the new customer master record is created. External. Enter the customer number manually when creating the customer. The number can be alphanumeric if the number range allows for that. Account groups define the layout of all parts of the customer master record. That is, they determine which fields are optional, mandatory, displayed or hidden. Nearly all invoices and credit memos from customers reach the accounts receivable component through integration with the sales order management component. In exceptional cases, if there is no reference to a sales order, invoices and credit memos can be entered using the Enjoy transaction. The Enjoy document entry screen is divided into the following areas. Work templates. Here you can select screen variants, account assignment templates, or held documents as references. Header and customer data. Document header and customer line item data is entered here. GL account items. The GL line items for the document are entered here. Information area. The document balance and information about the customer are displayed here. It also contains a link to the master data and open items. This transaction can also be used to create documents in a foreign currency. The foreign currency amount is translated into local currency using defined exchange rates.
This figure shows the Enjoy Customer Invoice screen.
Incoming payments can be dealt with in several ways in different companies and countries. Incoming payments are basically posted as shown in the figure. The items are cleared if the customer pays open items in the full amount or with an agreed cash discount. If a minor payment difference exists, this can be charged off automatically. The maximum amount that constitutes a minor payment difference is defined in tolerance group settings. Any payment difference outside the tolerance group settings must be dealt with manually. The two methods of posting payment differences are partial payment. The item being short paid does not clear. A new open item in the amount of the payment is created on the credit side. This credit entry shows up right above the open item being paid and it references the open item being short paid. Residual item. The open invoice is cleared and a new open item, that is residual item, in the amount of the payment difference is created.
This figure shows the Process Incoming Payment screen. The SAP system provides you with a tool that automatically analyzes all the open items and duns any items that are overdue. The system determines a dunning level, which corresponds to the number of days in arrears. The dunning level determines the dunning charges and interest levied, as well as which dunning text is selected. The dunning history keeps a record of which dunning notices have been issued. You can trigger automatic dunning for a single account, that is, individual dunning notice, or you can have the dunning program carry out automatic dunning for a selected number of accounts. Dunning is controlled by the dunning procedure. A dunning procedure must be entered in every customer and/or vendor account that is to be included in automatic dunning. A dunning procedure that is valid for one-time customers is entered in one-time accounts. You can define as many different dunning procedures as you need. SAP ERP Financials comes with several standard dunning procedures that can be used as a template for additional procedures.
You can specify how the dunning run is to be executed by entering parameters in the dunning program. You can use the parameters of an existing dunning run as a template and adjust the dates to meet your requirements. Typical parameters are the company codes and accounts that are to be included in the dunning run. During the dunning run, accounts are selected and checked for overdue items. The system then checks whether dunning notices have to be sent and assigns the relevant dunning levels. All dunning data is stored in a dunning proposal. You can edit, delete, and recreate the dunning proposal as often as required to achieve a satisfying result.
The dunning proposal is not a mandatory step. Therefore, it can be omitted. If done.print with scheduling is not selected, the system does not produce a proposal. Instead, it prints the dunning notices as soon as the program has been executed. In one step, the system prints the dunning notices and updates the dunning data in the master records and documents, including the dunning dates and levels. Correspondence relating to daily business first has to be requested before it can be printed. A correspondence request can be carried out automatically when special transactions such as bill of exchange charges, statement, or payment differences such as payment notice are posted manually by the accounting clerk. Using a request program that creates a high volume of correspondence requests simultaneously, such as periodic account statements, internal documents, and standard letters. Requested correspondence is stored in a correspondence request table and can be printed via a trigger program.
The Accounts Receivable Information System enables you to carry out quick analyses of important accounting data such as due date breakdown, customer payment history, currency risk for customers abroad, overdue items, number of days or DSO days that a customer takes on average to pay an invoice. Customer cash discount history, that is, days agreed or days taken. These analyses are based on pre-selected data sets or views that must be generated or updated at regular intervals by means of a background run from the SAP database. A job wizard helps you here with the update. The dispute management component in SAP ERP contains functions for settling dispute cases relating to receivables. It complements the logistical process chain, purchase order, delivery, invoice, payment in the stage between invoice and payment if the customer disputes anything at this stage.
A number of issues arise in the dispute case process that can be improved as part of financial supply chain management. These issues form the starting point for developing the dispute management component in SAP ERP. If customers make reduced payments or do not pay at all, the days sales outstanding or DSO increases. Days sales outstanding is a key figure indicating the average number of days that the customer takes to pay based on annual sales. This is the case particularly in times of worsening customer payment histories. In the case of deductions, the net value date is no longer valid for the cash flow forecast. This leads to difficulties in predicting cash flow. Dispute resolution today is a costly and highly manual process. The increasing number of disputes, therefore, has a double impact on costs. In addition, disputes can indicate customer relationship issues or problems within the company and can thus provide an important starting point for a company's quality management activities. How do receivables-related disputes arise? Customer provides information actively. Contact with complaints department. Contact with account manager. Contact with customer's accounting department. Customer makes a reduced payment. Payment difference discovered when incoming payment is processed, that is, cash management or accounts receivable accounting. Customer delays payment. Receivables become overdue because payment is not made and are discovered during account maintenance, that is, accounts receivable accounting. Process integration into financial processes has the following aspects. Integration of dispute management functions such as creation, display, and editing of dispute cases in financial processes or transactions. Automatic update of dispute cases by certain financial transactions. Automatic update of items in dispute cases by certain actions in the dispute management component.
This figure depicts creating a dispute case on receipt of payment.
The case management organizer is the tool to process dispute cases. The environment for processing disputes accessed with transaction UDM_dispute is where all users functioning as coordinators or professional agents such as dispute managers and dispute specialists perform their tasks. It has two main areas. Organizer on the left-hand side of the screen, start actions. Results area on the right-hand side of the screen, display results. In the role-based view, users can work on the record and case record models only for customizing users, as well as on dispute cases. Different role-based views can be defined for processing dispute cases, for example, to restrict the end user's view to the cases folder. The history enables quick access to dispute cases and other objects you have been working on before. The information displayed in the results area depends on the action performed in the editing area, such as Find Dispute Case, Selection Criteria for Case Search, My Dispute Cases, List of Dispute Cases, Search Result, Create Dispute Case, Screen for creating dispute cases.
Sales organizations are responsible for sales in SAP ERP. A company code can be linked to several sales organizations. The IDES company code 1000 Germany uses the sales organizations 1000 Frankfurt and 1020 Berlin. For example, any accounting relevant transactions in either of the sales organizations are posted in company code 1000. Each sales organization can use different distribution channels to sell goods. In principle, a distribution channel can also be used by two different sales organizations. IDES uses the following distribution channels: final customer sales, resellers, service, factory sales, store chains, industrial customers, pharmaceutical customers. The combination of a sales organization and a distribution channel is also known as a distribution chain. Distribution chains sell goods from the plants. Both of the IDES distribution chains 100010 and 100012 sell goods from the IDES plant in Hamburg and post the sales in IDES company code 1000, which is also assigned to the plant. Divisions typically represent key product lines of an organization. The divisions are assigned to the distribution chain from which they can be sold. The combination of distribution chain and division is a sales area. Customer-specific arrangements regarding partial deliveries or terms of payment, for example, can be made for each sales area. Statistics can be created and separate marketing activities carried out within a sales area. A sales area is the combination of sales organization, distribution channel, and division. A sales area must define sales area specific settings for a customer before it can start doing business with that customer. These settings could be special conditions and terms of payments that the customer has arranged with the specific sales area. An effective processing of sales orders involves all sales activities in a chain of narrowly integrated processes. The SAP system allows you to do this kind of sales order processing. The individual steps within a sales process are thus mapped by interlinked electronic documents. The SAP sales process begins with the setting up and the maintenance of customer relationships and ends with the invoicing of the delivered goods or the services rendered to the customer. The posting of incoming payments from the customer is already part of SAP ERP financials. The sales order processing begins with the pre-sales activities as shown in the following example. Customer query, you create and send a quotation. Order processing, you create a sales document. Procurement, the system determines the supplier of goods using data stored by you. Shipping processing, you organize and execute the delivery of the goods. Invoicing, you create the invoice and transfer all required data to accounting. Payment processing, you check open items and post incoming payments.
Sales order. The sales order forms the basis of the sales process. Once a customer has placed an order, a sales order must be created at the start of the process. The sales order is generated at the distribution chain level. The ordered items can be from different divisions. The sales order is a document in sales order management and does not cause any postings in financial accounting. When the sales order has been entered, the system carries out an availability check for the required delivery date. Outbound delivery. On the day of shipping, an outbound delivery document is created. Billing for the delivery can take place only when the goods have been taken from the warehouse stock and posted as a goods issue. This is a separate step in the delivery process. Picking. The warehouse management function is used for picking. A transfer order has to be created, which generates the pick order. The requested goods are taken from the warehouse and prepared for delivery. Goods issue. The goods to be delivered are posted as a goods issue. A goods issue document is created in materials management and an accounting document is created in accounting so that the goods issue is posted to the correct GL accounts. The accounting document debits cost of goods sold and credits inventory. Billing. A billing document is created in sales order management and a printed invoice is sent to the customer. At the same time, a document is created in accounting so that the receivable and revenue can be posted to the correct accounts. Document flow. This is a tool that allows you to view the related documents in the process. The sales order entry screen consists of several sections. Header data combined with position data. Item details. At the start of the new fiscal year, the balance carry forward program is run. It ensures that the balance on customer accounts is carried forward to the new fiscal year. The posting periods of the old fiscal year are then blocked and the special periods for closing entries are opened. After this, the following closing operations are carried out. Balance confirmations are sent and evaluated. Foreign currency documents are valuated. Value adjustments are carried out for overdue receivables. Accounts receivable are reclassified into short and long-term categories for the financial statement. The special periods can then be closed.
Balance confirmations, foreign currency valuations, and regroupings are carried out in the same way as in accounts payable. Therefore, we focus on how value adjustments are performed. The following options are available for creating value adjustments for receivables. You enter individual value adjustments or IVA as a special GL transaction E. You use program SAP F107 additional valuations to carry out a flat rate individual value adjustment. Once you have determined the amount of the value adjustment, you adjust the flat rate value by making a manual GL account posting. The posting record is expense from flat rate value adjustment to value adjustment. Doubtful receivables are written off as an individual value adjustment or IVA during year-end closing. The special general ledger method is suitable for this procedure because the transaction is entered in the customer account and is also posted to a special GL account, individual value adjustments for receivables. Use the tax code that represents a tax rate of 0% for the posting. After you have ascertained that the debt is irrecoverable or that the receivable has been paid, the individual value adjustment is reversed. If the debt is irrecoverable, the receivable is cleared from the customer account and the amount is posted to the account for depreciation of receivables. The sales tax is adjusted in the posting.
You can use a valuation program to carry out value adjustments. The program functions like the dunning and payment program. Each valuation run is clearly identified by the run date and identification fields. You can specify how to execute the valuation by entering parameters for the valuation run. You can use the parameters of an existing valuation run as a template. These parameters include the valuation method, valuation area, and posting specifications. The valuation run analyzes the accounts and documents defined in the parameters and creates a valuation proposal. You can edit it if necessary. The valuations can be entered manually in the document at an earlier date, that is, individual value adjustment, determined using a value adjustment key contained in the customer master record. During the valuation, a certain percentage of the overdue amount is used. The number of days that the respective items are overdue is used as a basis for this percentage, which is a reserve for bad debt. Several valuation keys can be created for customers of varying credit strength. That way, overdue accounts receivable from weaker customers will be reduced more than those for stronger customers.
The last stage of the valuation process is the transfer. GL documents post the valuation and the valuation is also entered in the valuated documents so that the valuation can be traced at any time. Note, the valuations can be carried out in different ways if the financial statement is created using different sets of accounting standards. The differing results are then posted to separate accounts that are used in different financial statement versions. Note, the valuation run can also be used to discount open accounts receivable, which means they are valuated at their net present value. This is a requirement in some countries.